Hello guys, Adam Harris here. It's Sunday afternoon on, 16th of September, and I'm going to send this out, I'm going to email this out tomorrow, and I want you to keep this on file for as long as you need to, just to see what ultimately happens here. But I've kind of been doing some I've been looking at this particular chart, and I have an idea about, and I'm going to pitch away as an idea, and the whole thing about trading is to have an idea, have a possibility as to where price can go, and then to see if price continues to go that way, and if it doesn't, so that's the whole idea, is to try and get an idea of where you think price will go, and then trade it in that direction, and keep looking for reasons that it's giving you to convince you that it is continuing to go in that direction. And obviously, I know that many people aren't quite there with the technical analysis yet, so I'm going to kind of put this out there. I'm going to cover some of this on some of my weekend sessions, but obviously I will help you guys through it in our individual one-to-one coaching sessions. So this is kind of cool. Okay, so I'm looking at Euro Aussie, and it was the one that when I opened up eSignal today, I'm just kind of having a look at the market up ahead, and it's the one that just was there, and I suddenly thought, I'll have a look at a few other things here. So I want you guys also to take note, please, that as a rule, there's nothing that I really hide from you guys. There's no techniques that I do that I'm consciously aware of that I'm not telling you guys. I clearly demonstrate what I'm looking at on the charts and where I see the trading opportunities. Occasionally I might do something and then it's unconscious. I realize I haven't actually explained to anyone what it is, but I don't think that'll necessarily be the case today. So what I want to do is to finish up what I was going to say is I'm really not big on the indicators, and it's not so much that they don't work, it's just that they're another layer that kind of effectively removes you from the most important thing, which is the price. I mean, that's really what it is. All we're looking at here is price moving on a chart, and the more we put on top of that, the more it kind of takes us away from it. So it's like makeup. You kind of got to take the makeup off and see what you're looking at underneath. And I promise you that the more you commit to doing that, the faster you will learn, your brain will learn how to read what's happening underneath. So you're kind of just going to have to maybe think about the idea of jumping in the deep end and just stripping everything off and seeing what you learn. If you're just looking at the raw stuff, and you can, and it is ultimately everything. So I'm going to say this now on today's date, and we're going to see what ultimately happens here. 16th of September 2012. I'm very curious. I think that we may well be at the beginning or the beginnings of a new market, trending market. So the market used to trend incredibly well up until I think it was about March, April last year, and it started acting up all funny. And it seems to me at the moment that it has been beginning to trend over the last couple of months, and now it feels as though it might actually be continuing those trends, which means then that if we look over 6 months, the market appears to be starting to produce some real trends. And when I mean trends, I mean less kind of real big moves up and down, and hopefully fewer bizarre bars that suddenly spike and kick you in and out. I mean, that kind of stuff happens on smaller time frames as a part of the market, but we've been getting moves on the daily which will completely kick you in and kick you out. I mean, it's crazy. So I think that we may look back, and obviously I hope so, but I think we may be looking back to now and saying this was around about the time when the market had actually started to trend. The markets are looking the stock markets are looking particularly bullish. They don't have to make sense to us, they just are looking bullish. That's why most people fail at trading them properly, because they try to reconcile what the charts are saying and what we think the market should be doing. So there may be, we might have a thing that I'm going to call this is my own idea, that we have a thing like a poverty bubble forming inside. What we have is what's being formed is potentially a poverty bubble, which is where people are still earning less and living off their savings, but are still spending quite a lot, and companies are spending less and hoarding cash. So what's ultimately happening is that consumers are running out of cash, and obviously what may happen, the worst case scenario, is that suddenly the banks and the governments and all of that suddenly realize there's just no more money left at the bottom of the system, which, let's be honest, is the citizens of every country, and then it kind of collapses from there. That's the idea. That's the worst case scenario. The best case scenario is that the companies, even though they currently are getting a lot more out of each employee, because they've kind of lean machines, they probably will start spending and employing people, and then we'll actually just recover. So at that moment when people are running out of money, the jobs will actually start coming back into the system. Anyway, that's just a little note by the by. What I wanted to show you here is I have very clearly kind of for myself, I'm looking at points where prices turn, and I refer to these kind of as, they're actually swings. And I've put in levels there, and then I'm just observing how price acts around those levels. And when I look at this chart, I see stuff that you may not see as a beginner trader. I see the patterns. I see the higher highs and the lower highs. The higher highs and the higher lows, and the lower highs and the lower lows. I see the trends on the daily. I see the differences between the higher and the lower time frames, and that stuff all comes to me automatically because I've looked at charts for 2 or 3 years now. It's actually been 3 years solidly. I've spent a lot of time doing that, so a lot of things are very obvious to me now that you may not see unless I point them out to you. But it will come in time, I promise you that. And obviously that's why I'm here, is to help you identify the things that you need to be paying attention to. So what I wanted to point out here was the story that we have, and think of it as a story, is, we had a long move down here, and I really am going to advise you against trying to rationalize why the market does what it does, and rather just have some faith in that the market will do something, will tell you what it's going to do, and that you just jump on board with that. Rather just take the approach that we see a set of waves happening here, and we're just going to follow through with that. And don't think about the chart, because people then start to try and rationalize what's going on with the euro and the Aussie dollar and the US dollar. And, there's a big market out there. It's a really big market, and it's not just news dependent. It isn't, actually. So, we have a down move here, and that's all good. We have price moving up, and what I want you to observe here, very obvious actually, is this was a really good clean move down. Not too much volatility, not like this kind of behavior. It was a good solid move down. It pulled up, started to head down, and from this point all the way down there, did a very long, steady move. Came down to the bottom, hit a key level. It's never been this low in history before, and then found a bottom. And it actually warned us. It was kind of doing really long moves down, a pullback, a long move down, a pullback, a long move down. And then it pulled back a little, and then it did a very shallow move down. And then it pulled back a little, and then failed to do a new move down. So you could almost see it slowing down and putting the brakes on. And then it started to go up. And it has really moved up. I mean, it's completely switched from sellers to buyers at such a pace that the angle and the speed at which it's moved up has been incredibly powerful. Then it hits a level, because at some point it's just got to take a breather. This is the breather. And this is fantastic because it's a very shallow pullback. Price is this is the lowest point it pulled back. Otherwise it's gone sideways. And so what that really means is that there's a lot of bulls in the market. And then it proceeded on Friday to just burst its way out of that. So it's very strong and bullish, hardly pulled back, and has stepped forward again. That implies currently that this move is going to continue upwards, probably, and hear me out on this, probably with the same kind of momentum on this. Probably. Of course, what it could do is, as it starts to get higher, closer to these levels, it could start to do more and more pullbacks. So in other words, as opposed to a straight move up like this, we might get some sort of smaller waves occurring if it's not as strong. But my belief is that it's the lead up to this has been incredibly strong. The pullback is very, very shallow, and it's already kicking off. Okay, and it's looking probably to go long. So what we want to do is we want to identify an area in the future where, and this is why I'm recording this whole thing for you as an exercise, because I'm going to come back and see if I was right or wrong on this. And I don't mind being wrong, because I have the ability to trade on smaller time frames, so I can still make money all the way up to this area. And if signs come up, obviously I will update you guys. If something else happens, I'll completely update you guys. That nullifies that. But this is why I'm doing this now, because I have an idea in mind of where this is likely to go, and I want to show you that we can. I'm trying to demonstrate that it is possible to predict to some extent where the market's going to go. or at least to have a plan A and a plan B. And I'm going to give you my plan A here, and then I'm obviously very excited to see where it goes. So we have this move up and we have a shallow pullback and we're kicking off. So the likelihood is we'll probably do an equal, give or take, an equal length of move. So if you remember from your basic notes, you get what's called an A to B to C to D move, like a lightning bolt. And so I am curious that if I take the lowest point in this move, is actually the lowest point is the low of this daily bar here. So all I'm going to do is I'm going to draw a line from that point, from the lowest point there to point B, which is the top of this bar here. And I'm just going to quickly, 784 pips if you're curious, by the way. It's not relevant, but this is our move. So we had a move from here up to here. Now, this is where it gets interesting. The idea being there's a pullback, and the question is, will the second leg, so this is the first leg up, and then there's a pullback, and there's a second leg. This is the kind of thing that does happen. You tend to get 2 legs up or 3 legs up, generally. So we're going to just identify a few things here. So we're going to copy this, and we're going to line this one up with the lowest point of that pullback over here, and we're going to put it up to here. Now before I do anything else, I'm going to put a line in here at the top there and see if that then subsequently lines up with anything else in the past. So we're going to move up there, and I'm curious, because of this, I think we have the probability, a high probability of an equal move up, at least. And isn't that interesting? Is that not fascinating that that move, almost to the pip, give or take, is almost exactly the same as the previous high? Now, that's worth noting. That is worth noting. So, let's pay attention to that, because that has now given me extra reason to believe we might have a move up to that level, to this level, because I'm actually trying to determine where price will reverse. So that's one thing. The next thing is that we're going to have a look at is that we're going to use I'm going to use the fib extension tool here, and don't worry about if you haven't used it. It's in essence, it talks about, the idea is that the move, the second leg, or the full run of this move upwards will probably go to a certain kind of distance and then turn around. And when we say turn around, we're talking about something like this, where it then actually reverses a very long way, not a small pullback. We're not actually talking about a pullback, we're talking about a change in direction. And I'm happy to cover with you guys, how do you know when it's a pullback and how do you know when it's a change in direction? Well, the simple way to approach it is treat it as a pullback. Unless you obviously have reason to believe it's a change in direction. But treat it as a pullback until it does something very specific, which then means it is now no longer a pullback, it is now a change in direction. So always treat it as a pullback first. So because that's just the better way to do it. So we have a move that now I'm thinking, is very likely to hit up here, either in one straight move or in one kind of a move like this, which is similar to waves like this. So I want to see what else lines up with that. So the fib extension tool says to me that if I look from this point to this point and then take the pullback into account, it will project how far it's likely to go. And so it will give you set targets. It will either go 100% up, or it will go 121%, sorry, it's 127%, or 161, that 1.618 extension. So it'll have set values. And what I'm trying to do here is line up things, see what stars align. Because if they align and different traders are trading different things, you will have lots of traders looking at those levels. Just, they won't even be aware. They'll just, one trader who uses one system will see that level for his own or her own reason, and another trader will see it for their own reason. So traders who only trade off fib levels will see that level. Traders who only trade off support and resistance will see that same level. And so the stars align, so you can be damn sure the traders are going to step in and out of the market at that point. So using the fib extension tool, I'll just right click on it and bring it up. I just use mine as all gray, I don't need the colors for this for now. And 382, I've just put in the standard fib levels. Now, interestingly enough, for those of you who aren't sure, for some reason we have two values that seem to crop up. So I've put them both in, 764 and 786, as potential turnaround points or changes in direction or breathing in and out, pauses. and then I put in 1, and these are the extension values, 272, 618, and 2. So in other words, if it moved all the way up to 2, obviously that's a 200% move. And it's very unusual for it to go beyond that. So I'm looking for, believe it or not, I'm actually looking for a move from here to here, one of these two, 272 or 618. And I'm going to explain something else. I'm going to refer to something else here. So I'll click on the Fib extension tool, click on that lowest point there, run it up to the highest point of the first move, which you guys saw, that first leg up before we paused, and then pull back and line up the thing with the lowest part of this pullback. And I want you to see how close that 1 is to where we are. I actually, before I did the video, it lined up exactly. So I've obviously I've drawn the segment line a bit differently, but it doesn't matter. It was smack on that line. So what does this tell me? Well, this tells me that we will definitely have a pullback at this level. We will definitely have a reaction when price hits that level, for sure. But I don't believe we will have the turnaround there. It is more likely to me that we will have a turnaround. It's very unusual to have it there. We will have a turnaround probably at this level or this level. Probably. Possibly even that level. But I'm thinking, let's have a look. So what I'm going to do is put a line in here, there, and another line in here, and go and look and see if that connects with any other key levels in the past. And let me explain why. Because normally a move, in this particular case, because this is so bullish, the implication is, okay, there's a couple of other possibilities. It could actually reverse here. It's possible. The longer term trend of this particular chart is downwards. So yes, it's conceivable that it might only run up and not go quite as high as that. It could hit here, and then it could actually reverse completely. Yes, that's a possibility. And that's one of the situations that if that changes, I will record another video and send it out. But the euro, a lot of the euro pairs are looking like, and cable pairs are looking as though they're starting a longer term uptrend. Like for the next 6 months, 6 months to the next year, they might just run up. Therefore, I'm thinking in line with that, it's more likely we'll probably do a break of this, because this is how the market works. If in the future it's planning on going bullish, if we are right and the monthly has started a longer term uptrend, it will break this high. It will have to, because it has to break that high to say to everyone, I am actually planning on going further up. So that's what it has to do. So therefore, it will break it, and it will then decide to turn around at either that level or that level. Then it will actually start to do a pull back, and we'll deal with how far it's going to pull back at that point. But let's just have a look here. So we're going to go further along and past and see if these levels line up with any other support and resistance levels. And let's just pull things in again. And I mean, I don't know about you guys, but that's pretty precise to me. That's pretty precise to me that we have hit some support and resistance levels there. So there you have it. We have levels that have shown up in the past, and I just did this literally by accident kind of beforehand. Okay, and so we've never been this low before. That's why the chart is kind of all the way up there. So I'm thinking that's probably going to be the case, that it's going to run up to one of those two levels, and it's possibly going to be, I can't tell. I'm not sure yet. I'll have to see what it does at those levels. I know that there'll be reactions and it might start to slow down, but I believe it's probably going to work its way up. You know, I mean, it's even conceivable it could go sideways for a few months and then break up and then do the longer term reversal. But those are at least places where I think we have a good run where things will go to. I can be pretty certain that by the time it gets here, it'll do a pullback, possibly to here, potentially, and then go long, depending on how strong this move. If this move is really strong, the pullback will probably be shallow, and then it'll continue. If it starts to do deeper and deeper waves, it'll pull back a bit further, and then it will probably continue up to that level. So that's something that I find quite interesting, that those are the levels we go to. Now, to throw in something a little bit more advanced, and it's not advanced in terms of some kind of secret technique you need to know. It's just that, as I said to you, different traders have different ideas and patterns and stuff they look for. And there's a particular type of harmonic pattern that looks for this, that looks for a leg up like this to line up with another level from this top move, which is the highest point. Let's just have a look here. So we're looking for a previous low, we're looking for the highest point there. So probably from a move from here all the way down to there and a move up, it'll look for retracement for that to be a key level. So all the way down and then a pullback to one of these levels would line up, believe it or not, with as a fib retracement level on one of these before it reverses. And so the point is that that's actually a trading opportunity. So what happens is when price comes up to 272 or 618, bears will step in with their stop either up at 2, or if they believe the turn is going to happen at 272, their stop will be up here and they will sell. And it's interesting because they will only sell it down a very short distance. So it's not really a great trade in my opinion. They'll trade it back down to probably here, and then that'll be the move. And we'll assess that when we get to it, and I'll cover that with you guys if you request it. But I think it's more interesting that I just wanted to show you that probability of this heading up to these levels, and that's something that I'll be watching to see if that occurs. And that's really it. So that just to repeat again, that the idea being that actually on a longer term this ultimately reverses and goes down. But so what will happen is that the bears are waiting for price to get up to here or here, and then they will short it. And they will short it down only to about here. And that will be based on a harmonic pattern. So if you want to know what that is, that will be, I think it's harmonic trading, right there, there's a page there, this one, yeah, harmonic trader, it's like that, and it just talks you through different patterns. It gets very confusing and it's quite hard to pick it up. I don't want you to be too obsessed about that. I'm happy to cover those things with you, but it's a lot to remember, that's all, it's just things like that. And it talks about bats and butterflies and fantastic things, and so a move like this would be basically that kind of a move. It would move from the A to the B, a pullback to the C, a move up to the C, and then you would sell it at that point. And it's really, really good, but guys, it's much simpler to just do the support and resistance levels. Just much simpler to do those support and resistance levels, because you'll find those selling points anyway. So I can keep it really easy. And I do think it's good to know about that stuff so you know what other traders are looking at, but I don't want you to think there's some hidden secret formula. The secret to trading is understanding that there's a common theme that will come out of the chart no matter whether you use fib levels or whether you use harmonic trading. But the key lies in being able to understand that where those levels are, and then being able to learn about how price is behaving when it gets to those levels. It will give you signals whether it's going to move through or not. I was already kind of relatively bullish on this one, simply because the pullback was so shallow. So that was such a strong move, and the pullback just didn't want to go for like 6-7 days. It just went sideways, which to me says it's quite bullish. And of course, the second it breaks up now, the horse is bolted. So I do anticipate, we'll see what happens. Often you get a really big move on a Friday, you get a pullback on a Monday. So we might have something like that happen. I'm prepared for that. That could happen. And we might have a pullback to that. So I'll show you my positions at the moment that I have on the little trading accounts, so that you can see if this is good or bad, ultimately where this goes. And we'll know, because we'll know what's going to happen with we'll see. So these are the positions I'm in at the moment. This account was, I think it was 800 and something last week when I did the midweek market focus, and it's now up £400. So if I closed everything out now, I'd be up £1,381, which is, so it's been a phenomenal. It's just been really, really good. It's been a really good week. But what I wanted to show you is I am long on Aussie CAD. Very quickly to show you where the reasoning is behind that. To me, this is what I saw, which was very simple. It was a bounce, a higher low, and a break of that, and actually a retest. That was a retest. So for me, it was really simple. It was a bounce. So we had a high, a low, a lower high, a lower low, and then we had a lower high, and then we had a higher low and a break of that. So we've gone into an uptrend, and then a retest, and I bought on that. I think my stop was on a lower time frame, and then we're heading up. So we'll see what happens with that, because it's CAD, and I'm not a fan of CAD. It might reverse. I'm British American Tobacco or something. I went long on that. That's quite interesting to see what the logic was behind that. let's just go have a look at that. I thought you might be interested in that one. Okay, this is the thinking. Very simple, guys. So easy, so simple. As in, bounces off the 20. This is my weekly chart. You can see how it bounces. It's a good, strong trend. It tends to bounce off that 20. Price it pulled back. I'm not sure why. It's pulled back to the 786 level, one of those, which is also support level. And more importantly, on the daily, it actually pulled back to the 200. So this is, again, very interesting to see where this is going to go. But I just bought with my stop under here, because if it continues down, it'll take my stop out. If, on the other hand, it picks up, my target is actually this next high. So that's kind of like it's going to take forever to get there. It's going to take like 2 months to get there. But I'm hoping it'll bring me in about 5 or 6% on that single trade. Very, like, guys, no secret thing. Just literally a bounce off the 200 moving average, probably off a trend line, and a bounce off a support level. So lots of different things there. Then I have Burberry. This is interesting. This is interesting to me. Burberry was such a nice, long-term reliable kind of stock. And it's crumbled a bit here, so obviously the recession has hit them quite bad. So it kind of faltered and then came back up, and this did not actually break that, and then it kind of faltered again. So what I observed was that price there, and there, price had just stopped at that level. So yes, this may well be the start of a collapse. It's possible, absolutely, and that is why I've only risked 1% on this. But I bought when price was about this level, with my stop down here. So my stop is actually underneath. In fact, the smartest place to do it would be put it under there, but I think I went closer. So my stop is the second blue line, and then I just bought, and then I want to see if price will come back up. Possibly I'll watch how it comes up to this trend line, because if it is going to carry on down, it'll halt at the trend line. Which is in line with this support resistance we'll see. But I'm counting on Burberry's a good stock. I'm counting on buyers stepping in, because that's, they won't get it at that price again. And if the rest of the stock markets are bullish and they continue upwards, this will as well. And this would have been a really good place to get in, because you have, through good fortune, you have a drop in prices and you can jump in. And this all comes with time, guys. So don't be mad if you don't see this stuff, because again, it could be wrong. It could ultimately pull back and then just carry on. There could be other reasons why this particular stock is faltering. But that's why I'm quite happy to take this, because I'm already up a little bit, and I'll get to certain points on the daily, I'll just move my stop to break even, and that's it. And this is going to take forever as well, because if you think about how many, each one of these is a weekly bar. This is a weekly chart. This is I hate to say it, it's like a 3 or 4 month trade. And I'll probably get bored with it and just close it out. Yeah, that's probably it, because I can make more money on some of my trades a lot quicker. But it's a fantastic trade opportunity, and I had to take it. I had to. And in fact, you should be doing that. You should be doing stock trades as well. This is a gap down, and a really big gap like that, markets will often try to close that gap, especially the bigger the gap. So I'm inclined to think it's going to close the gap, and then it's going to reassess what it's going to do, which is why that trend line and that will come into play, and that previous resistance. So again, I have a target in mind where I think it'll probably go, and then I just watch to see what it does. But if the rest of the market in the meantime, while it's closing that gap, if the rest of the stocks and everything and the indices are climbing, then it makes sense that it's probably going to go up with them as well. And while we're on that, I want you to just take note that this FTSE has broken a very long-term downtrend. I think I spoke about this on the Midweek Market Focus. Since 2007, it just can't seem to break this downtrend. It broke it on Friday. So I'm quite optimistic about if we're right, if I'm right, and the markets are going to start trending again. This is it. These are all the little signs we'll see where we're breaking new barriers here. And in the beginning, when you're in a hole, after a recession, you can't, we're all rightfully so very hesitant to say, okay, things are changing, they're getting better. You'll only know after a while. But I guess I'm going to point it out now. We'll see where it is in a month's time, in 2 months' time, in 3 months' time. And if it's continuing to go up, by that time, the average non-trader person or beginner trader will be, okay, I'm convinced, the market's picking up. So I'm always prepared. We've had, if I change this to a monthly market, a monthly chart, we have these cycles. These cycles are normal. So yeah, it's possible we could get to that level and then reverse. That could happen. All right. If of course, we do break down and it just carries on down, then of course the fecal matter has hit the rotating oscillating device. But yeah, I'm very curious because the rest of the stock indices around the world are quite bullish. So I want to see it go that way. So, and if of course it's not going to, you know me, I'll just send out an alert. So that was those two, and then we go back to the other ones. Euro Aussie, which I've spoken about, I'm already in already. Euro Kiwi I'm in. Pound Aussie and Pound Kiwi. Pound CAD is my old trade. It's been going for a while, so that's a 3-month trade anyway. So I'll be in that for a while, and then I'm in the FTSE. And the FTSE I'm actually down, but there's only a very simple reason for that. Is I actually took profit, and I got triggered back in again in the up move. So this may ultimately, what could happen if we have a pullback tomorrow? A lot of these could actually turn into losses, stop me out, and then kick back in and go up because my stops are quite tight. So what might happen is, and I laugh, sorry, because you have to laugh, but I could come back, I could be next week, and I could be at 500, and I have to start again to get everything back up. So it's going to be very interesting. But I can tell you one thing: if my closing liquidation value now is 1,381, and come Tuesday or Wednesday it's higher, if it's sitting at 1.6 or 2 grand, then I can tell you that is confirming that the belief that this market is turning into a longer term bull market. It's actually started to trend. If on the other hand we have a gap down tonight where the market opens, and we have a pullback tomorrow, and a couple of these stop out, and then they start going sideways, which, you know, it's the kind of thing that can happen, then obviously I have to reassess. Then I'm just going to have to, you know, like I'll just have to make up the money. But I really want to see where these trades go. So I just kind of have a bit of faith in my own analysis and just say I'm going to stick with it. These are most of the trades that I really like at the moment. If I do any other trades, there'll be smaller trades. I don't know. I'll see what happens. But the yen pairs are also looking to go bullish. So I'll have a look at those. There are a lot of trades happening at the moment. So we will see what happens with this. And if these start to move up, you will see, you'll see there will be pivot trades all the way up to here, pivot trades on that, snipers for sure. And then if we get a pullback, there will be income generators. So all of those types of trades can happen, and that's why I'll be looking at Euro Aussie, Euro Kiwi, Pound Aussie, and Pound Kiwi. Because out of those four, there will be pullbacks. And the ones with the pullbacks, as a herd, they'll be moving up, but some of them will give you better opportunities to get in and out. So I'll be looking at that. And then, we'll be looking at some of the yen pairs, which are looking bullish as well. That's it. So let's see where this goes. Let's see how this week ends. And I'll be catching up with you guys. I'm looking forward to my coaching sessions. I really do enjoy it, and I'm seeing some really good results. And if you're happy with the stuff that I'm doing, send an email to customer service or something and let them know that you like what I'm doing. I don't think they know. So anyway, so let's have a look at that. Otherwise, enjoy the rest of your Sundays or your Sunday, and let's see how we can get this going. And obviously, my goal is to get you guys making money consistently. I do pretty well so far. I've had a bumper month. I will tell, if you ask me, I will tell you how much I've made, but I would be very cautious because it spooks some of the other coaches, and just because it just does. So it's a lot more than a coach, I suppose people should make. So it's been a good month. I just mean as in it's been a good month. I've been on the right side of a lot of trades, and I've had my losses. Have a look here. I've had a couple of those. So closed positions, I had a string, actually. These were big losses, and they were all very specifics. Euro Kiwi and Pound Kiwi were my fault because I entered prematurely. The rest were very simple. They were just spikes. They were just spikes where it pulled back. My stop was very close by, and they just hit my stop. And then I re-entered, and then of course you can see I subsequently actually made up much more than that. I made up about 150% of that loss. So I actually closed up on Friday at about £1,000, and then I had one last loss right at the end, which was Kiwi Swissy, and I'm still long on it. And I just obviously the signs aren't there. So some of these trades are just a couple of things where I just enter because I'm kind of in the long term. I think it's going to move up, and then it goes sideways for a week, and then it pulls back, hits my stop, and then maybe a week later it then moves on. So let's see how that goes. So I do make losses, but the whole idea is to call my account forward and then to work on the losses and not make them again. Because I actually can tell you, out of all these losses, there's only 2 or 3 that are spikes. I mean, there was a euro one which was ridiculous because it was It was just a ridiculous spike, and during a news announcement, which is fair enough that happens, and it stopped me out. So I got back in and I made the money back. In fact, you can see what I did subsequently here. I did 69, so I did 100 and I lost 70, so I was up on that one anyway. But that's fine, so be it. The rest were my fault. I didn't actually wait to see signals on the chart. I just jumped in. And I still do that from time to time, but it happens less and less and less. So I am human, but I am a good trader, and I believe in technical analysis and reading the charts, and I will do my damnedest to make sure I teach you how to do it. So don't worry about that. It is very possible to make money on this. Let's see how this goes. Let's see if the account is up or down in a while. And by the way, I've done everything. I've moved my stop, I've risked too much, I've traded too much, I haven't traded enough, I've got scared, I've got greedy, I've got... thought I was invulnerable. I've done everything. So you are in a safe place by telling me all that stuff. It's like Alcoholics Anonymous. But anyway, so here we go. I wish you all the best, and I look forward to seeing you guys on our coaching sessions. And I'll chat to you soon.